All right, so good morning, afternoon, and evening, wherever you are joining us from. Wherever you're joining us from, first of all, I want to welcome you all on our weekly Zoom session. And I would want to find out if my screen can be seen and my voice can be heard. Also, if you are here, you feel like being made a co-host to help navigate the meeting, you can equally raise your hand and you'll be made a co-host. There is one lady I always know her name, but apart from her, if you are here, you want to be made a co-host, it doesn't uh, mean anything. But if you want to be made a co-host, you can raise your hand and you'll be allowed to speak. Just in case if you have a downline, a prospect who wants to join, and in case the room is full, just let them have our YouTube link. They can watch it from there. The Zoom capacity can only take 100 people. I'm still looking into a way of upgrading the participants number, but that also comes with a cost. The one I use currently is a yearly plan, so I'll have to look for a way to do that. All right. So we began last week. We were looking at certain things that is going to help us. So please, Mr. David, you can lower your hand. I have made you a co-host now. You can lower your hands. All right. Just in case anyone also want to be made a co-host, please. Like I said, being made a co-host does not institute anything. It doesn't make you anyone, but just to ensure the room is navigated very well whilst the presenter is presenting. Okay, so I think we are good to go. Looking through the list, I'm tempted to think we have some new people among us, but that does not mean that we're going to be going back always. I will just take my disclaimer and then we'll move on. So a quick one, these are very important to be made. They are very necessary to be made so that at the end of the day, we are all at the same page, individuals making their own decisions with no one comparing them. So this presentation is for educational and informational purposes only and should not be considered financial advice. Always do your own research before investing in any crypto or DeFi project. You are responsible for your own actions. Should you engage in any crypto or DeFi project, there is no guarantee that Bytnex will fulfill their promises or projected returns. There could be many unforeseen factors, like you all know. People who took contract in 2022, 3-year contract to be precise, and people who took contract in 2023, 3-year contract as well, are getting converted due to some underlying factors. So that is what it actually means. So there is no guarantee that there's going to be a fulfillment of the promise or the projected returns, because there could be some unforeseen factors that will make Bytnex incapable of fulfilling their promises. Please be aware of this. I always emphasize on this one. Please be aware of this. So therefore, due to those unforeseen events and all that, the future is never predictable. Only purchase DeFi hybrid contract with money you can afford to lose. With money you can afford to lose. Should Bytnex fail to fulfill their part of the contract. So this is the disclaimer I would want to give to all participants, whether they have contract or they are prospect yet deciding to take contract. All right. So I will not go through the roadmap. We've been doing this several times. But let's get to business. I always tell you that do not ignore any of the Zoom meetings you attend. We have Zoom meeting taking place on Sundays. We have some taking place on Tuesdays. We have on Wednesdays, the global one. We have also other individual leaders who also have their private Zoom for their teams, and links are being shared across board. You should always attend these meetings because you will learn a thing or two. I normally do mine on Mondays, and in my, I try to add a little layer for learning purposes. It does not seek itself to abolish all other Zooms you have attended, whatever information you have been getting or you have been given. It doesn't abolish them. Over here, we learn into the concept. So most of the times you find our presentation are very different from, we don't talk more on the project, the different contract, the amounts you be, although at the latter part we'll be talking about them, but we want to we pick the concept and dive into it. Because one thing I believe that once we understand these, regardless of whatever comment you'll be getting outside there, because you have some understanding, you will definitely know how to manage whatever information that seems otherwise you get from outside. You get it? Yeah. I remember, I think yesterday, somebody was asking that a prospect was asking for the smart contract address and all that. You know, these things are not available when it comes to Bytnex, because it is not available. It does not mean that you should stress yourself. Once it's not available, you just, but people demand these things because that is how we believe and people think should. So far as we talk of staking, this should be what should be given to people. And some weeks ago, I showed you a particular scan where we were able to see, we even picked Binance Node, and we saw some few things over there. I said, I'm planning to do a deep tutorial or a deep session on that particular area when we talk of staking, validators, or what goes into it. What do they do? We will find time to also put that one in our presentations as well. And so just understand, over here we learn. We are learning into the concept. And once you understand, you know the decisions you make. No one will force you to buy contract. You buy contract. No one will tell you the number of contracts you should buy. Understanding will influence the number of contracts you will purchase. Understanding will influence the risks that you will take. Understanding will make you know that whatever you are doing, you are just trying to make something out of it. But you also understand that there are no guarantees, because staking itself has some risk. Anyone who will tell you that there is no risk in staking is never telling you the truth. Staking also has a risk. That is why if there weren't risks, then the partnered bank would not wait for an insurance cover before they now issue the capital for the staking. That alone should suggest to us that there is risk involved here. Yes, in as much as we are not staking with our own capital, does not erase risk from it. Because at the end of the day, for you to get a contract, you are paying an activation fee. And so therefore, as a member, the activation fee that you are paying for that contract is your risk. Let's get these things clear. So we learn over here, we try to dig into the concept for our learning. So in the world of cryptocurrency, making money is more than just buy low and sell high. As the industry matures, new earning methods have emerged, and one of the most popular being staking. I always tell people that when we came to crypto industry, those days, if we ever had the knowledge and the information we have today, those days, all that we knew crypto to be was to buy low, sell high. We were trying to buy some coins. We hold it. Once the coins appreciate, we sell them. We were holding coins like myself, but you know, we didn't have that information that even the coins that we are holding in our crypto wallet can be put to work in a form of staking them. But all that we knew was that to put your coins into work, you are supposed to be finding yourself on a certain investment platform where you move some Bitcoin or some Ethereum or some coins to go and invest, and you'll be getting ROI either weekly or daily or monthly or bi-weekly. We didn't have that information. And so we found ourselves losing our money, all in the name of investment. And DeFi has introduced genuinely new ways to borrow, lend, trade, and earn without relying on traditional intermediaries. DeFi for short is fully is called decentralized finance, banking without the traditional bank, so to put it. And when it comes to DeFi protocols run on smart contract. And so therefore, there is also another trend that we also follow anytime we meet any project that is that this project is running on a smart contract. We feel it is safe. In as much it's being run on a smart contract does not mean it is of no risk. Because certain things can also happen in the smart contract that can also lead to losing your money. So a project run on a smart contract alone is not to be taken that, okay, then it is safe. Smart contract has its own issues. If the logics that they put in there, if they put in some malicious logics, or this project run on a smart contract and it is deployed on the blockchain, when anything is deployed on the blockchain, it becomes immutable. Yes, this is true. But remember that the blockchain is only trying to react to a smart contract deployed on it. So the blockchain will not be able to detect that there was a malicious logics in the code. Let's get these things right and let's learn more so that we will save ourselves from unnecessary losses, even when we are staking. There was this staking, it runs on smart contract and all that. That is good. It's a DeFi. That is good. However, each of them has their pros and cons. And so DeFi protocol run a smart contract, which is a self-executing programs on the blockchain. If I want develop a smart contract and makes the smart contract at one point should steal funds. Blockchain cannot detect that. You get it. And also there was this one thing that is also going on. People say, you see, this project is very legit because they have renounced their contract. Okay, we will look at these things some other time so that you understand some of these things very well. Because a lot of people make decisions on projects based on these key things I have mentioned. The project is a DeFi project. It runs and it's a smart contract. It runs on a blockchain. The contract has been renounced and all that. and people make decisions based on that without not understanding what they are doing. Okay, so but over here we are looking at staking. Is it right? So cryptocurrency staking is we putting your, so take note of the word your. So putting your crypto to work for you is the smartest way. Putting your crypto to work for you is the smartest way. Take note, the grammar there, your. Staking is you putting your crypto, not someone's crypto, not someone's capital, your crypto to work for you. And therefore, staking is one way to do that. If you want to put your crypto to work for you, staking is one of the way. Those days that we only knew of investment, you put your Bitcoin somewhere, they give you 30% every month and all that. Some work out, some they pay you, and at the end, those days we didn't have this information. We don't even know. I have been on Binance since 2017. You get it? I've been on Binance since 2017. I happen to buy the coins itself, but because we had no information, we didn't even know that even inside Binance there was a project that we can do it called staking. We didn't even know we can also put our coins in Binance and earn money. We didn't know. We didn't know. So we dash our coins somewhere, some will work out and all that. And so staking is one of the ways to do that. It lets you earn rewards on the crypto you already hold. On the crypto you already hold. And when it comes to staking, all that you're doing is that you are just trying to help run a network, safeguard the network, make that network secured. Say it's like you trying to buy shares of a particular company, and we buy shares of company that they are doing well. So once the company is doing well, we are earning some dividends whilst we still hold on to our shares. We have not sold them. So this staking, this is not complicated as some of us the first time we heard, and I can tell you a lot of people came to know of staking and all these when they actually came to Bytnex. Yeah, formerly Cryptus. Uh, so I always tell people that if nothing at all, if nothing at all, you have never cashed out in Bytnex. Bytnex itself has been a school for you. If nothing at all, it has been a school for you where you've been able to come across several people who are in depth in the concept, and you have learned a whole lot. It has. I know people that they use Bytnex as a case study. Anytime they meet any project, they try to check if that project is worth it. So if nothing at all, this particular project has been a form of a school to many people. You are essentially putting your coins, take note of the word again, your coins, up as a security deposit to show that you are committed to the network health. That's all staking is all about. You trust the network. You feel the network is doing what it will do well, will never do anything malicious, and so you are putting some commitment in there because of your trust. So anytime you are staking, this is what you are doing. And we learned last week that, and there are two main ways we can participate when it comes to this particular new way of earning in the crypto market, staking. You either become a validator or you become a delegator. A validator is the one who is running the nodes and the master node and all that, they validate transactions. And the delegator is the staker, so to put it this way, is the staker, like you and I. You stake your coins because you don't want to run those technical setups. And so you delegate your coins to a trusted validator. So that's what we learned last week. I've done all these things, and we look at some ways that validators are selected, some criteria, and we look at these criteria to draw some few nuggets that it is possible that is what Cryptex or Bytnex is into. Yeah, remember, these things are for learning purposes. So far as Cryptex has never on their website have not vividly told us they are engaged in this and that. It's for our learning because we read from our website and we try to guess with assumptions what is likely to be what they are into. And so we look at the stake size could be one of the factors for being selected as a validator to validate transactions. And we saw that the more native tokens a validator locks up. And so we drew that conclusion that so it is reasonable that these people, they have the connection with the bank in question, they have the connection with the insurance company in question, they have done their paperwork, they have done their business model. We are just users. And so these people, why did that? They did not take the money and stake it themselves. But we saw from this point one that the stake size is playing an integral role in this concept that Bytnex is using, because it says that the more native token that the validator has locked, that is why they need you and I. We established that fact last week. We also saw that when they have made that lot of token locked, the higher their probability of being chosen, because once you're a validator, the system has chosen you to validate some transactions and be in some consensus decisions and stuff. And so it's a system. And one of the ways that the system try to pick who should be validating at a particular point in time is the stake size. And so we drew that conclusion that this is likely why they need us. Okay, we also saw that there is a network advance, a simple system that they call verifiable random function. They put this verifiable random function in place to ensure that the wealthiest node cannot predict or manipulate the selection. And so we have a lot of people. I've been hearing people say that Cryptex or Bytnex have over 2 million people. I don't know, but this is what I've been hearing. So this is a huge number of people. Can you imagine 2 million people? So the project operator is actually, we can place the project operator if they are running those validator node. They are among the wealthiest node operators among them. So we drew conclusion last week that it's likely that they fall in this category, and therefore when it comes to the criteria of being chosen to validate transactions and engage in other blockchain stuff, Cryptex or Bytnex is likely chosen as well. We also established the fact of coin age. Last week we said that some chains will track how long tokens have been staked. And so you remember these guys have from 2 years to 7 years contract. And I tell you, anybody who actually comes to Cryptex the first time, I can tell you people that came around 2022 or 2023 or 2020 or wherever, people look at the contract fee is $100 and they look at the duration. A 3-year contract will give you 35,000 when you pay $100. A 5-year contract will give you 470,000. You pay $100. A 1.2 million plus of a 7-year contract, and you pay $100. I tell you truth, people who have that a single $100, are likely not to subscribe for a 3-year contract. I tell you the truth. They will rather look at the amount payouts. They rather look at the amount payout. I'm seeing a hand up, please. Abraham, your hand is up. If it's a question, kindly hold on when we get to a question time. So kindly lower your hand. It is not yet time to raise your hand. However, you can also put it in the comment section if it's something that you want to draw my attention to. All right. So we saw that it's likely that it's some of the things that people looked at. So the coin age, this contract is still having 7-year contract locked there, 8-year, 5-year contract locked there. When somebody just have $100, majority of the people, I can tell you of a fact, majority of the people, myself, most of my contract I took earlier on were 5 and 7-year contract. Because I look at the payout with that little amount of money that I will use to subscribe, that I'll get this one. Why should I subscribe for 3 years and 5 years giving me 400 something thousand? So these are the mathematics people do. But the point is that we're looking at the coin age. It says that some chain track how long tokens have been staked. And it went on to say that older stakes get priority. So you can imagine these people have 7-year contract. So some contracts are still there. 5-year contract, some contracts are still there. So if there is any selection, please take note. This is for learning. And we are just assuming and guessing. So if there is any selection for coin age, then I will believe that cryptos apparently will fall in that category. And it says that older stakes will get that priority. However, after they get the priority to validate a transaction or whatever demand that the blockchain needs them to do, after that, their age reset to 0. And they do that, the system does that to prevent monopoly. If not that, I believe cryptos will be almost validating transactions if they are running knots, if they are indeed validators. And the next thing that we saw when it comes to the selection of the validators on the proof of stake network has to do with proportional probability. Proportional probability. Proportional probability. And it says that if a validator holds at least 10% of the total network stake, and over here too, we actually were assuming that there's a likelihood that if they are going by this particular criteria, there's a higher chance of cryptos or Bytnex being selected. Because we look at our numbers, 2 million people. And these 2 million people, not everyone has one contract. Some have double. It's a mixed up. We have people having single contract. Some have two contract, 10, 50, 100, 150. And this is money. This is money. So putting all this together, somebody have 2-year contract, 3-year contract, 5-year contract, something. We put all this money among all these 2 million people. Don't ask me how did I know the 2 million. This is what I've been hearing. So I believe so that we are 2 million people. But if we put all this money together, we are actually trying to assume that if they go by this proportional probability criteria, then Bytnex is likely to be chosen. And it says that when the validator holds at least 10% of the total network stake, so the whole of the network, if cryptos or Bytnex is holding about 10% of the total stake, it says that they have roughly a 10% chances of being selected for any given slot. This means that apart from the normal validation that they will be selected, once a validator is holding at least 10% of the total network stake, they also have that extra chances of doing other work as validators on the blockchain if there is a chance for that. And so at the end of the day, we try to say that then looking at these criteria, definitely they will need us. Because the more people that subscribe, the more the staking amount is going up, the more tokens are being locked, the more we will also have some tokens being in the system for a very long time. That is what we are trying to assume. If you are clear to this point, give me one in the comment section. We actually do this just to ensure that we are not alone in the chat. Please, if you are getting what I have just said to this point, give me 111 in the comments section. 111. If you are following me carefully, give me 111, 111, 111 in the comment section. Just 111 in the comment section. All right. You can keep it coming. Let's continue. You can keep it coming. All right. So being a delegator, this is where most of us will belong. If you don't want to run your own node, this one means that you can delegate your coins, take note, your coins to a validator you trust. You can delegate your coins to a validator you trust. You are basically lending them your voting power. Once you cannot run the node yourself, you cannot run node because running node engages a lot of cost. Let's go back here for people to understand when it comes to run the node. So being a validator, they run a computer node that keeps the network running 24/7. Simply, validators are people who keep the blockchain network running and secured. They are responsible for creating new blocks and verifying transactions. And this requires technical knowledge. So you and I, that we don't have the technical knowledge, we cannot become validators. A powerful computer that always online. So if you want to be a validator, you should have a very good, powerful computer with a good speed and with a lot of things, and often a large number of coins to stake. So these guys, definitely, if you put them here, they are definitely in doing validation because they have often large coins to stake. We are the people, we are the coins. Once we buy contract, we are trying to add to the coins they are staking. And these have a good reward. There is a higher reward, but it also has some responsibilities. And look at this point I was going to say that brought me back to this point. Minimum stake requirement. In Ethereum, you are required to validate a single, take note, a single validator with a minimum of 32 ETH. So you look at the price of Ethereum now, and you multiply by 32. That is the minimum required Ethereum that you can use to activate just a single validator on Ethereum blockchain. So you can imagine if these guys are running several validators on the Ethereum blockchain. Let me put it on record. This is for our learning, and we are just trying to look into the concept and trying to align it with likely what we think Bytnex is doing or Cryptos is doing. It's also another blockchain type is Binance Smart Chain. It's also said that for that one, a minimum to start a validator is 2,000 BNB. So don't forget, I told you last time that there are 3 requirements when we definitely will get there. We'll get there. So let me not bother you there. So at least 2,000 BNB and above, about 10,000 BNB. So if you want to just run a minimum BNB blockchain, you want to put in 2,000. But it says that and about 10,000 BNB, so that you can have realistic chance to become top active validator on Binance Smart Chain. Take note. So if somebody is having just 2,000 is the requirement, that minimum requirement that you can start a validator. But if you have 10,000 going, 10,000, not $10,000, 10,000 worth of BNB. So look at the price of BNB now, multiply by 10,000. That's the total monetary amount involved. That is if you want to have that realistic chance to become a top active validator. So not everybody can run validator node. Not everybody can run validator node. All right. So let's go back. So validators does the technical work, and you share in the rewards they earn. Now take note that validators, when they validate anything on the blockchain, they earn what we call validators reward. Then after they earn this validators reward, then they will come and share parts with the delegators. And so whatever we earn as contract holders, that we earn from 0 point something to up to 0.3% daily on our contract, that's not mean that this is the percentage that the validator node is earning from validating transactions on the blockchain. What they earn is what they are passing some to those that they have bought contract. And even when they share this reward with us, they also take a small commission for their service. So you can remember whatever contract that you have activated, every month you are being charged $30 for activated contract. That is the commission for their service. And so this brings me to a very important point I want to make, that you see, they are doing validations on the blockchain, so to put it, and they are earning validators reward or validators profit, and they are passing some to us. They keep some, so they have money. And then when also they also give us this every month, they are taking $30 from our accumulated profit. That's another source of money that these guys are making. 3, when we are withdrawing, there is withdrawal fees that we pay. That also goes to them. So it's not surprised that they have extra rewards that they give for people who are progressing. Let's move on. We'll look at these things in proper perspective some other time. So simply put, validators confirm transactions and maintain integrity. If there is anything that you forget in this session, just understand that validators confirm transactions and they maintain integrity. But we delegators, what we do is that we support validators to enhance security. We support validators to enhance security. And we also look at last week that we should be able to know where we place cryptos or Bytnex when it comes to knowing the difference between protocol and platform staking. A staking protocol is said to be the underlying blockchain mechanism itself. But a staking platform is a company or an application that is providing access to staking. So knowing the difference will enable us know where we place Bytnex. So staking offers safer, predictable returns, but is slower and often not enough to build wealth alone with, unless you stake large amount, significant amount. When it comes to the normal staking that we know, this staking has never doesn't do double digit returns. It has always been a single digit. And so this is why one of the reasons why people do not normally like staking, because if you want to stake and you want to see significant amount of money, then you should be able to have significant amount of money at stake. If you are just putting in $1,000 or $2,000 or $100, it will take you years to realize significant profit from it. So this is where Bytnex is coming in. Well, Bytnex is going to enable us to have some good amount of money to stake with our little activation fee. And so we got here last week. The structure, and I want you to pay close attention to this one so you understand properly the model we are in, what Cryptex is offering, why it does what it does, why some of the things that we think it should be available is not available. So a structure, or the structure where a bank provides the staking capital, an insurance company insures that capital, and a DeFi contract performs the staking. It's not a standard DeFi staking architecture. Remember when we started and we were talking about cryptocurrency staking, I told that it's the act of you locking your crypto. You heard me making emphasis, take note of the word your, throughout we are listening, your crypto, your coins, your. So when it comes to staking ought to be done with your own crypto. When it comes to staking, it ought to be done with your own crypto. The moment the structure is the way that we have it available in Cryptex or Bytnex, you should understand that that particular structure is not the normal DeFi staking out there. Such a structure is rather a hybrid structure. And what does it mean? A hybrid structure combines elements of traditional finance. So over here, we have the bank, we have insurance company, with crypto infrastructure. Therefore, it should be understood. So we should understand the whole of Bytnex concept as a business model that is proposed by a specific platform. So over here, the operators of the project, which is Bytnex, propose this kind of model. It's a model that they propose to work with. So from the eyes of us, this is a model that is not the standard way, although they end up staking on the blockchain. But from the point we are making here, do not rather see it like, don't vividly say it is a DeFi staking platform. What we are rather doing is that we are into a proposed business model. They have worked out for a bank and insurance company to come together. The staking out there should rather be with your money. So when you are not the one staking your money, that model is someone's specified model they have made as a business out there to run. So let's take note of that. So it should be understood as a business model proposed by a specific platform, not as how DeFi staking generally works. A DeFi staking must do with your own money. You stake your own money. You don't stake with banks' money. You don't stake with banks' insured money. No. So let's get the understanding properly. And so we can avoid some of the technical questions people ask us when we are trying to present this kind of model to them. Let them understand this is a model, it's a business model made by them. So their model is that they partner with insurance company and the banks, they provide the capital, that's their model. Once you put it this way, there will be no lots of questions for you. People will not be asking you, so can I have the smart contract address? Can I have the validator? Not blah, blah, blah. If you put it this way, it will avoid those questions. You made them understand this is a model proposed by that platform themselves. So they have done their own due diligence with the bank, and then they have, then we are done. All right. So because this is a model that is proposed by them, this is what necessitated the 3 rules that they made when they were about starting this contract. They said that all involved founders, banks, insurance companies, and users remain absolutely anonymous. The second rule was that the wallet holder cannot withdraw the capital provided by the bank. Normal staking, you stake money, you have access to your money, you can unstake it, you can take your money away. A case that you are restricted, that you cannot withdraw the capital, means the capital is not that. This is a model. It's a business proposed model. And went further on to say that even you cannot withdraw the capital, you can also not withdraw the staking profit during the entire term. There are stakings that you stake because your money, you have access to your profit, you can withdraw them at any time. So the moment this kind of rule comes in, it confirms what our learning has told us. It must be understood as being a hybrid structure that combines the elements of traditional finance and crypto infrastructure. It must be understood as a business model. And the third is that all monthly insurance premiums, monthly DeFi contract management fee, and annual bank interest are settled exclusively by staking profit. This goes outside the way DeFi staking works. So you must understand from this session that this is a business model written by the operator themselves to operate once the capital is in. Okay, so let's move on. So key things to understand about Bytnex is that it is built with the intent of staking on the blockchain for the purpose of getting legitimate reward in return for participating in the blockchain consensus protocol. It is believed that Bytnex will last as long as the blockchain exists. The day that blockchain ceases to exist, this will also cease to exist, because their core business is that they are making money or generating revenues from blockchain consensus. They are not trading, they are not doing other things, anything that has to do with trading. No. They are rather staking on the blockchain, and they are getting rewards as from all angle, trading fees. People are buying cryptocurrencies, people are trading, people are selling their coins, people are swapping it and all that. All these things, once they are stakers on the blockchain, whatever is happening on that particular network, they have a share to take. And so it will exist so far as the blockchain is still in existence. It is built to connect with offshore banks and insurance partners to ensure that the participants get loans without any collateral, and the loan is directly credited to the user's provided wallets on the Bytnex platform to automatically stake. So this is the part you must understand. This means that instead of you providing the capital, the participant rather pays activation or contract fee. In all staking out there, in all DeFi staking or whatever staking out there, you rather stake with your money. I keep emphasizing this. The moment you are not the one staking your money, this is a different business altogether. And the participant does not directly own the crypto asset that are staked. You don't own them. So this is a kind of a business governed by its own rules. Instead, they receive contractual rights to a share of returns according to the platform terms. So they have made it like we earn from, I used to hear 0.1 to 0.3, but if it's rather unfortunate, the site is not, we are not able to log into our wallet because update is long going. Those that they were having the opportunity to view their contract details, where you go to that place that you can see 15-day profit schedule. You see each day the percentage that is dropping there. If you look at even 2-year contract, you can see as low as 0.02%. You get it? So these are that 0.02 up to 0.3 is a proposed rate of reward that the platform made themselves. It is not what is coming from the blockchain. So we must understand this. So instead, we receive that right to share of returns according to the platform's terms. So they said after 3 years, having put your 0. something together, accumulated it, you're going to be getting like 35,470 times 5 years, 22,000 2 years, and then above 1.2 million 7 years. These are according to the platform's terms that they have for its members. So for knowledge purposes, I will definitely, today we'll end at this point, and then we will continue next week, other ones. And sure, I'm just hoping that next we will have same faces we have today, so that we will not have to go back. But even if you go back, we have new people, we'll just do quick brushing, and then we will get back on board. Okay, so it's also for now why Bytnex connect with offshore banks and insurance. The offshore banks and insurance you are seeing here from the website under QFA, they made it specifically there that the capital is coming from offshore and all that. So that's where we got this particular term from. So generally, when it comes to a DeFi project will frequently use offshore setups, because in those countries, and during the roadmap, remember somewhere here during the roadmap, I shared something on that when that they made that offshore. So we have it here. So 2018 May, set up offshore structure. They set up the offshore structure. Okay, so let's go back over here. So DeFi projects frequently shall use offshore setups because in those countries. So I want to give ourselves some assignments. Let's go and research on countries that frequently allow crypto DeFi projects to use offshore setup. Just go and research. You can see those. One of them is Singapore and all that. Okay, so in those countries, it says that non-KYC operations are allowed. So that is why, when we created an account with Bytnex, you were not asked of your name, you didn't upload your ID card to be verified or something. How is this possible? Because they have an offshore setup that allows it to operate that way. So there is a non-KYC operations. Two, those countries have a flexible regulations. I can imagine, let's look at what is even happening with the MiCA, for example. The European states are now having another set of regulatory body to regulate crypto stuff. So this becomes very complex and all that. You need to meet a certain requirement on all these. And so to cut long story short, if they didn't have this setup, by the time that you and I would have heard of cryptos, there once existed a project. It means there once existed, because the kind of demand and the kind of requirement that if you are to operate in some of other countries that do not have flexible regulations, they would have killed the vision. You know what? So the setup for offshore with countries of those sorts actually have a flexible regulation so that everybody, whatever they demand, will be something easy to be provided so that they can operate. And also, these countries also, they do not restrict crypto lending or staking. Unlike other countries that crypto lending and staking are restricted, they should undergo so many things like, for example, this maker. You get it? So they had to set up this offshore just for the purpose of ensuring that the service that they are rendering will never be restricted, because these offshore countries allows that these crypto lending and stakings are not restricted. Lastly, they permit anonymous corporate ownership. They permit anonymous corporate ownership. This is where I would end my presentation today, and definitely take 1 or 2, 3 questions if there are. By raising your hand, by the count of 10, those hands which are raising will be those that will be allowed to speak. If you cannot also speak over here, you can also put your comments, your question, your add up in the chat box, and it will be read. So by the count of 10, the hands up will be those that will be allowed to ask their question or speak. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. All right. So at the count of 10, I see only one hand up. So that will be the person that will be allowed to speak. I will entreat that you ask questions or you make comment based on what was presented here. Thank you very much. So let's allow. Oh, you guys are not doing well at all. I've counted 10 when it was only one person. So for now, let me take the 2. We have Abraham and Divine. Abraham and Divine. So first, let's take Abraham. Then after, oh, you guys are not doing well. I counted 10. You are not raising your hands. We need to be disciplined on this. When I count 10, at the end of the 10th count, whatever hands up will be those allowed to. So I think I will just stick with just 3 people. Any hands raised after these 3 people will never be allowed to talk. So let's take Abraham. After Abraham, we will take Divine, and after Divine, we will take Charles, and that will be all for now. The rest of you can put it in the comment section. It will be read. So Abraham, kindly unmute yourself and let's hear you.
Yes. Good evening. I want to start by thanking you for the elaborate discussion on crypto deals and the various model of staking. You started by talking about those that signed their contract between 2022 and 2023 and how their contracts will be converted to 2 years. Hello, are you there?
Yes, please, I'm here.
Yes. Yes, at every crossroad, we keep hearing about this earlier contract being converted to 2 years. I don't know. And can you please elucidate on this the categories of these contracts and when these their 2 years will be expiring? Because between 2002 to 2003 it's 3 years now. So can you please, so that then which of those contracts that are not affected, so that because we have had it right from when we changed from Cryptex to Bytnex, but we have not gotten the real picture and what it looks like. Thank you.
All right, thank you very much for your question. I think they have already explained these things at our back office, what's leading to why our name was changed from Cryptex to Bytnex, and what
Yes.
at the end of the
Yes.
day is causing the 3 years contract being converted. So I would advise that if you have not read those things, once the site is back, try to read them. There are answers there, what led to those things that they are doing. So you understand better. They have made it clear to us what is causing those things. So you should read them, a whole lot of things that they put over there. You go to your dashboard when it comes, you will see at the top, it says Bytnex News. You click on it. We have 2 dates there, 11th of October and I think 12th of October. You read all informations there, especially on the 12th of October. It will tell you what and those things that is happening there. Some contracts are being affected and that they are going to be converted, and it is still ongoing. And I remember somewhere last year, we read somewhere that some of these things will be done manually. And so we are believing that once they are done with this current update, we should be able to have the clear picture of contracts which have been converted. But apart from that, we don't know actually which other contract will be affected. But we know 2022 contract, almost all of them from October were converted. And in a group I am in, people who also took it in 2023 up to June, July. I've gotten people in the last maintenance that came back, they saw their contract converted. So we are open to see that it's either ending of that, or maybe the new ones will also be known after the update is done. So thank you. I believe I've answered your question.
It's okay. Thank you very much.
All right. Sorry, you were muted again. You were saying something.
Hello, no.
Okay.
I heard you. I'm okay.
Okay.
I will check it out.
All
on
right.
the
So let's take Divine. All right. So Divine, kindly unmute yourself and let's hear you.
Yeah, thank you so much, Iswood, for that presentation. I mean, as always, at the beginning, you made mention of global meetings. I would kindly love to have that link to that Zoom. Some of us work at night and we catch up. The meeting that we are available, we're able to catch up on. So if I can have a link to that global meeting that hosts on Wednesday, I'll be much grateful. Thank you.
Okay, but I believe you are in any of the WhatsApp groups, because these meetings get posted in various WhatsApp groups. We have some being held on Sunday. We have also one typically for those that they want to take Cryptex as a business, trying to build teams and other stuff, that is being held on Wednesdays. So these are always shared across various groups. we have out there. So you should be in any of these WhatsApp groups.
Do we share on this group? The Wednesday meeting?
Yeah, they share on all the WhatsApp groups. All the WhatsApp
Okay.
group, people share these links in. So I don't know which WhatsApp group that you are in. Which one are you in?
I am on this. The one that you created is word something. The one I used to join this meeting, and then I'm on Bytnex.io.
Yeah, so
something like that.
yes, so we'll be checking them whenever you see any Zoom link. We have Wednesdays on, we have Sundays on. We also have other leaders who also do private Zoom. So whatever link that you see in that Binance group, that has to Bytnex group, that has to do with Zoom meeting, you have the opportunity to join. You get it? So the links are posted across board. The link are posted across board. Yeah.
Okay, I'll pay more attention to this because I'm used to that Wednesday and Thursday meeting directed by Omar. So, and you're on, and these are the only 3 meetings that I'm used to. But the Wednesday
thank you very much.
All right, thank you.
Okay.
Thank you.
Welcome. So let's take lastly, Charles. Please unmute yourself and let's hear you. Then we'll be out of here.
Okay. Good day. Thank you for giving me the opportunity to ask, and thank you for expatiating, helping us to understand what Bytnex is all about. Talking about some countries that allow for offshore banking activities, and they have a little bit of flexible regulation. Now, what about a situation if those countries, can you hear me, sir?
Yeah, loud and clear. So let's hear you.
Okay. So what about if those countries come up with regulations that does not allow for such flexible offshore banking activities? So what becomes of Bytnex?
I believe at that point, Bytnex will know what to do. But I know for sure these offshore countries that allow offshore setups are mostly countries that they have flexible regulatory staffs. It's not only for crypto staking. I know of a particular Forex trading broker that is also having that kind of offshore setup as well. So when it gets there, they will know what to do. When they get there, they will know what to do. And it's not just one country. We have several countries that allows that. So if one country is no more allowing that, other countries are allowing that. So it doesn't stop operation. You get it? But definitely when it gets there, they will know what to do.
Okay. Please, I'm sorry, sir, please. Kindly help me. The question that the second person asked about
your voice breaking, please position yourself well. Hello.
Okay. Can you hear me now? Can you hear me now?
Yes, please.
Hello. Okay. I said, please, I'm sorry for taking you back. My internet was interrupted, so I did not get the question that the second person asked. I mean, 3 years contract being converted to 2 years. I joined Cryptex in the month of June 2024 for 3 years. So what becomes of my contract, please?
For that one, no one can answer that. For what we know is that 2022 and 2023, some of them have been converted. For now, we have not heard anything like 2024 something. Like I said, we have to wait till the maintenance is over and we'll know if the issue has to affect even people in 2024. But for now, there is no answer to this question. We cannot tell. Thank you very much.
Okay. Oh. All right.
Okay. So thank you